Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look at the technical picture. Although you can see on Friday performance was not really very active, so mostly on the daily chart you can see the pattern that indicates indecision. So non-farm payroll was well, neither positive nor negative. It more stands in a row with the expectations. That's why market is trying to shake the boat, but it was not very successful. In general, this week fundamental background is much more interesting rather than the technical. And in today's weekly report, we have shown why we think that the Fed statement doesn't reflect the real situation on the markets, what to expect in nearest time. So, and also we have shown some mismatch in the data that we've got from the employment market and the real situation. So by our view, actually we need to add at least 10 million people more to the unemployment, and that results not in the 3.6 but in 9.6% from the current population, so labor force. And we explain why this stands so and how the situation could change. In general, by taking a look what Fed has said, what steps they are taking, we think that it's not really a long time to collapse that we could get. So in general, everything goes more or less in a row with our long-term suggestion, long-term plan. If you remember, we said that somewhere in the summer, maybe closer to the end of the summer, the problems in the United States economy will become evident and they start to reflect in the statistics. So currently, we do not see it yet. If you do not take the additional analysis on other market performance statistics, especially on the bond market, you can't identify these problems by looking just on the CPI, for instance, or non-farm payrolls on unemployment and other stuff. You need to make the combination of the different statistics to see results. So, and all the stuff we have tried to make in today's report. So I think that might be interesting. So, in the technical side, in general, in the short term, we're still watching for the same target, 104.30. It should be reached. This week, actually, market was not able to do this from a technical point of view. It has happened because of weekly oversold, because the lows of the Friday is actually the weekly oversold level. But, as a result of this performance, first we have still the grabber on the daily chart. And if you will take a look at the dollar index, you will see that this Friday action also has become the grabber on the dollar index. It means that both patterns suggest drop below the lows. So it's very high degree of probability that next week we finally will get the reaching of the major monthly target. Next, target cluster stands around the parity and 1 or 2 area. So this is we explained in monthly analysis of the monthly chart. On the lower time frame, there are other signs exist that market should keep going lower. First of all, on the 4 time frame chart, we've got few attempts for market to keep going higher, but all of them has failed on Friday evening on the payrolls report, and as a result, we've got 3 grabbers in a row. So all of these patterns also suggest taking out of these lows. On the 4 hour, finally on the hourly chart, the upward bounce indeed has happened to the area that we have discussed in the morning on Friday, but it has happened a bit different way. So it has happened not by the ABCD pattern, but market has first formed these lows and then jumped on the payrolls report. But anyway, the pullback has happened. In the first glance, it seems that we could get extended upward retracement, some kind of the ABC bottom. It's just because of the performance here looks, well, rather nice, so it looks strong with some frosting action. But to be honest, guys, it seems that importance of the grabbers here and here, as well the overall fundamental background and performance on the other markets. For example, take a look what's going on in interest rates. On Friday they have climbed more and has hit the 3.14 level. Just keep going high despite any overbought and areas on all time frames. Interest rates are rising. That makes pressure on euro currency, and in such environment, well, at least by my opinion, it's more chances that euro currency shows the direct downside action. And the grabbers that we have here and on a daily chart should probably hold and become the patterns that will become the actually starting point in the background, the context for a possible downward continuation. So that's approximately what we have on euro currency. That being said, if you would like to buy euro currency, I think that in the current circumstances you will have to wait at least when all bearish patterns will fail. If you would like to go short, well, you could use these patterns or daily grabber to consider taking the short position with the stops above the top. So whatever you would like to use, whether it's daily grabbers, should be stops somewhere above this area. For these 4-hour time frame grabbers, well, you could probably place even tighter. That's actually the only scenario that we have valid currently on euro.